Stocks are getting a boost from this morning's low inflation print, and it looks like Wall Street is looking to capitalize on the bullish seasonality tendencies into year end. The latest Bank of America Global Fund Manager survey shows funds are withdrawing cash to deploy into stocks and bonds. And now they're at the lowest cash levels in about 2 years. Here with more, we've got Yahoo Finance's Blikre to take us into the numbers. Hey, Jared.
Hey there. With cash yielding so much, over 5% in a lot of money market accounts, we have seen trillions of dollars on the sidelines to earn that risk-free interest rate. But now, over the last few months, we've seen some signs that fund managers are finally starting to deploy that into into stocks and bonds. Here we have the Global Fund Manager survey showing 4.7%. That is the average amount of cash that the fund managers who answer the survey, who have about 2/3 of $1 trillion under management, that is their current level. Now, interestingly, this is now a neutral signal. When fund managers load up on cash, that's a contrary buy signal. So when we have levels above 5%, that is bullish. And when we have them below 4%, that is bearish. However, as I said, we have just dropped into neutral territory. Some other indicators, not going to get into, but their bull-bear indicator, that remains in bull mode. So it's not as though everything is in neutral here. But all of this is against the backdrop of what these funds have been doing over the last few quarters. And we can see here, they are finally getting overweight bonds. And this is the first time that we've seen these levels since the global financial crisis. And only now are we just seeing funds start to be overweight equities. We were talking about this with Josh Schaefer earlier. Now, I want to bring this forward and talk about seasonality, because seasonality has worked out for the most part this year. We got a couple of buy signals in October. The last one worked out. The one earlier in the month was a bit early, but stocks tend to end November strong. The S&P 500, going back to, I believe, 1950, that is this purple line here. And then the pre-election year, that's once every 4 years, the presidential cycle. We're in the third year of that. That tends to end in positive territory too, although you will note there's a lot of back and forth over the month. And now I want to present seasonality from another point of view. I like to look at the VIX, and we are just coming off a seasonal tendency to spike in September and October. In fact, we did get these spikes. These line up fairly nicely right here. And now we have dropped. We had those 8 days of losses in a row for a VIX. We found a footing down here. We're right around 14. But you'll notice that the trend is to go down into the end of the year. And usually when the VIX goes down, that is when funds are rallying. I just wanted to end on another note. This is the S&P 500, which is just breaking to the upside. This is a 6-month chart, and this negative trend line here was pretty closely watched. Only within the last couple of days have we managed to break ahead here, but we are clearing some major technical hurdles. People were saying 4,400 is potential resistance. Well, we blew through that. 4,500 is another number, but after this, I think people are going to start setting their sights on the record highs that we had at the very beginning of 2022. So something to look forward to, perhaps, and some caution in the winds as well.